So we got that. So now we just want to get some basics in terms of, bullish, bullish versus bearish and all that kind of stuff, right? And so for the setup part of this, I didn't want to get too complicated because really it's more about, look, this is kind of these are the tools that we want to use, all right? So if you've got your chart, you've got a daily chart like this, and you've got the bi-weekly and the weekly, okay? And essentially here, we'll just focus on this one. So, because this is the chart that we're using to put up our trades, right? So, I mean, essentially we're gonna come over here and say, all right, I'm gonna add a study. I'm gonna come over here and say, oh, John Carter, great. Okay, I'm gonna put on a squeeze, all right? And then from there, the only thing I need are some moving averages. So I can come over here to moving averages, exponential, all right? And there's a 21. And generally, to make it simple, we can kind of do that 21 period moving average, and I think that's a 21 period moving average. Let me make sure. 21, yes. So, so the question is going to be a couple different things on this. What we saw was the stats tool, and how I found that this generally will work, okay? Because in the daily chart can be, in fact, let's put on I'm going to add another chart here. I'm just thinking out loud here. So let me save this style here. Style, save style, rolling 2 weeks. I just want to save those indicators there. And then I am going to load it there. And then let's come back here and I'll show you what I'm doing here in a second. So what I'm trying to do here is show you a very simple way. Oh man, that's not what I wanted to do. Well, this will work. Now, if we're gonna do this, let's do it right. So let's do style, load style, rolling 2 weeks. Okay, there we go. And then here, I actually want to do the weekly, okay, which the stats are not going to show up. And then let's do also add, oops. And I'll give you guys copies of the setup. Moving averages, in this case, I want this to be the 8 period. Okay, so we're trying to figure out, do we focus on the bullish side, or the bearish side of a market using spreads? As we all know, spreads are more forgiving. Now, for those of you, does anybody not know what the squeeze is? I guess I should check real quick and just see. Yeah, it was in the homework, so you should know. Basically, the idea behind a squeeze is essentially you're getting some compression of volatility, and these red dots tell us that the Bollinger Bands are compressing and they need to release energy. Okay, and you can see the energy release here. So basically, what I look for if I want to buy a call, I most of the time need to see a squeeze. Okay, because I know a squeeze is going to give me that extra boost. All right, but of course, we're not going to get squeezes all the time. So the question is, can we reliably do these rolling strategies that we talked about without the squeeze? Okay, and the answer is yes, and this is what we do. So if you look at a weekly chart, okay, the main thing on the weekly chart you want to make sure is that if you're going to do bullish trades, is on a weekly chart, the stock is trading at or near its 8 period exponential moving average. Okay, if the weekly chart, if you can see it's trending higher, right, and have the 21 on there as well, because this will give you kind of your your kind of filter. But essentially, if the 8 is on top of the 21 and price is essentially above the 8, then on a weekly chart you've got an uptrend. Okay, and as long as you've got an uptrend on a weekly chart, then you can continue to do the rolling strategies. Now, yes, there are going to be times like this where this is a little bit in question, okay? If the daily chart is below the 21, it opens up the possibility that we could come down to this 21. And in that case, we want to be careful, okay? And the safest trades to do this with are when the weekly is above the 8 and the daily is above the 21. So that's a long way of saying that I would not plan on doing a bullish trade on Google next week. All right, does that make sense? You guys want me to write that down? Okay, because the nice thing about spreads is you do not need, now if you got RAF and you got everything, that's a plus, okay, because we're going to be able to time things a little bit better. But in general, if you're going to keep this very simple, okay, so let's say bullish rolling 2-week spreads for income, okay, so what are the parameters? Weekly chart with 8 and 21 EMAs, that's exponential moving average, 8 EMA on top of the 21 EMA, and price above the 8 EMA, okay? This is the definition of a weekly uptrend. Yeah, we'll do the screenshot too, and that's a good idea. I mean, I'll put the squeeze in there, but that's really what we're looking at, is those moving averages. Now, ideally, you know, if you want to get more strict, you'd also have, you know, on top of the 55 and things like that too. But we just want to keep it simple, because with spreads, the nice thing about spreads is you don't have to be that precise. Okay, you know, you're going to do it. You know, you want to do these every week, so it's like, what are the criteria? Well, you know, at least on a weekly chart, you know, at least see this, right? So then we come over here and just say, okay, we can see what that looks like. And then daily chart. Typically what I like to see then is that 8 EMA, 21 EMA, and 55 EMA. 8 is on top of the 21, which is on top of the 55, and price is above, not the 8, is above the 21. Okay, so what does that mean? So we come over here. If I can see, add study. And then what's nice about this is then, because it's not hard to find stocks to do this on then. And then you guys can have, like, get you a copy of this too. So I got 8. And it's not so critical, like what the values are on the moving averages, but essentially you're having a fast one, a medium one, a slow one. Okay. So, let me get colors would be nice. Oh, I've got yellow tinted glasses. Okay, there we go. Is that right? All right, so by looking at this then, the daily on Google is suspect. So if we're looking at, you know, Google as a candidate for next week, you know, for me, it's kind of like, well, there's got to be something that's probably better. Does that make sense? So, you know, you want to have 8 on top of the 21, on top of the 55, but then price above the 21. Bob, I would agree with that. Higher beta is good. Let's look at let's look at a couple ones here. So Facebook is close, but you know, if we look at something like American Express, okay, so does American Express meet the definition of an uptrend? Absolutely, unequivocally, yes. You know, that's an easy one. Okay, so if you're wondering what to do these on, this is an easy filter. So if we go to Apple, now by the way, we're just wondering like, oh, what are we going to do? What are we going to do a bullish play on? Is it going to be Apple? Absolutely not. Absolutely not. Now remember, because when you have a set of rules, then be careful if you hear yourself justifying something. If our rules are The weekly, for a bullish trade, on the weekly, we got to be above the 8, okay? But we see Apple below the 8, but it's at the 21, and we start saying things like, ooh, Apple's a good value here. Oh, I saw that article, all right? We're fooling ourselves. We're now not following our rules, okay? What we want are some simple rules, and the rules like that, I mean, the rules are pretty simple, right? So we're not even worried about squeezes. It's just where is it in relation to the moving averages? Now, if the weekly is, the same thing here, if it's below the 21 and we're like this, then we're going to sell call credit spreads. So it's kind of easy that way. Okay. So yeah, so let's just throw out some names and just tell me, so on Monday, we're going to do either a bullish play, i.e. a put credit spread, a bearish play, i.e. a call credit spread, we're going to pass. So, oh my God, okay. NVIDIA, tell me, bullish, bearish, pass. Yeah, absolutely bullish. No question about it. Alibaba, bullish, bearish, pass. Absolutely bullish. No doubt about it. Amazon, Amazon, you owe me money. Bullish, bearish, pass. It's bullish, right? Apple, bullish, bearish, pass. Yeah, it's kind of a pass because we want it to be below the 21 before we start selling call credit spreads on the weekly. Oh, let's find a bearish one. Does anybody have a good bearish one? Let's see, CVS. Yeah, CVS. Yeah, so I mean that's a little tricky because there's a squeeze. So now we've gotten a situation where there's a squeeze. If there's a big squeeze about to fire, we kind of want to wait and see what happens there. I mean, technically, this could turn into something like a bigger move to the downside, so it's a little different. We're actually looking for stuff that's, kind of in between squeezes. A squeeze is kind of a different play. It's going to give us something different to work with. CMG. All right. Oh, that's an intriguing one. That's pretty close to bearish. Pretty close to bearish. Okay, so here's another thing, a nuance, is that when you have a squeeze, say a weekly squeeze and it's triggered, okay, and it's lost momentum, typically at that point you are expecting sideways to down movement. So that's totally call credit spreads, even iron condors and things like that. So that's intriguing. CMG is my MLN. Let's see, Buffalo Wild Wings. Yeah, we need to trade that stock because it owes me some money. All right, so Buffalo Wild Wings. On Monday, are we selling a call credit spread or are we selling a put credit spread? Yeah, this thing is bearish. So what happens with this is that literally, what's nice about this is that first of all, the setups that meet the criteria stand out right away. Okay, we're not looking at fundamentals. All we're doing is looking at collecting some premium, and we can make sure that we're kind of in alignment with the statistical tool. I mean, remember, by default, if for some reason like your statistical tool isn't working, by default, we know we're going to do that 60-30 delta, which is in the presentation. Then, if we want to tweak it further, we can come over to the statistical tool, okay, and tweak it even further. Let's look at price line. Yeah, price line's kind of a no man's land. So on the, on the daily, it's bearish, but on the weekly, it's because remember, on the weekly, we want it to be above the 8, right? So it just gets really clear. I mean, we might as well make this easy for ourselves. SLB, I mean, yeah, call credit spreads all day long. All right, so let's do a quick review here again, just to make sure. And again, we're not worried. And here's the nice thing about doing premium: we're not as concerned about Fibonacci levels, not as concerned about voodoo lines. And don't get me wrong, those are fantastic levels. All we want to do is capture that biweekly premium. Okay, so the entries don't need to be as precise. But and one thing you can do here is like, okay, if Carolyn's got something that she likes to the upside and it's coming down into a two-step in her support levels, what are you going to do? You are going to sell a 60-30 delta put credit spread, and if you compare it against Eric's work, you may adjust that to a 60-20, Okay, and now you're going to combine that with Carolyn's work. So what you're doing now is you're taking the whole idea of income trades, okay, and you can do it on your own with the simple filter that we're looking at, but you can also apply it to other setups. If you see me buy a call in the room, you think, man, John, that's kind of a risky trade. Sell the put spread, 60. You know, you're back on that income kind of a trade. Yeah, this is an easy scan. This is an easy scan to look at. So, daily chart. So there's the weekly chart. So if it's bullish, you got a weekly chart with the 8 and 21 EMAs, which is the exponential moving average. 8 is on top of the 21 and price is above the 8. That's the criteria there. And then on a daily chart, we want the 8, 21, and 55 EMA. The 8 is on top of the 21, which is on top of the 55, and then price is above the 21. Okay? So, in fact, let me get both of these here together so that's not confusing. And this also takes into account the idea of multiple time frame analysis, right? So if it meets this criteria, we default to a rolling 2-week put credit spread or call debit spread using the 60-30 deltas tweaked after looking at the biweekly stats and utilizing the profit and stop targets already discussed. Total opposite is true for bearish trades. So it's just, you just reverse them. Yes, thank you. Now, the one part we didn't talk about here is, are we going to hold these into expiration? No. So this is where our time stop comes into play, okay? Time stop. All right, so let's go back to our Google example. $25 spread, 10.50 credit. All that's everything we talked about there. 14.50 max loss. Okay, so we have a target of 315, stop loss of 17.75. We've already covered that. Now, at what point? Here's the question. We do not just sit back and wait for these to get hit. If they are not hit by a certain time, then we get out at current prices. So what day or how much time to expiration do you think we're going to look for? Yeah, you can do OC orders. Yeah, generally Wednesday would be the latest. Tuesday close is fine, but Wednesday is the latest. Okay, so week of expiration. Week of expiration. If not hit by Tuesday close or Wednesday open at the latest, then look to close at current levels. Does that make sense? So, I mean, essentially what you're doing is, you might get into, you'll get into something on Monday that expires the following week. And then if your parameters haven't been hit, 6 trading days later, that Tuesday, you're just going to get out. Yeah, so this isn't a 3-bar thing. That's more for directional trades. Does that make sense? Bo, okay, Bo, great question. So let's do a what about. What about? What if I got in Thursday instead of Monday? Does my exit date change? No. So that's an easy one. So you really, here's the thing, okay? Now look, there are different trades that we like to do, like the Thursday, Friday of weekly expiration. But what I'm telling you is for consistency purposes, in this account, I'm not going to be screwing around with that in this account. Essentially, I want to be out of all my options that expire like this week by Wednesday morning at the latest, ideally by Tuesday. And then I'm going to be looking at stuff the following week, because my belief, and it doesn't mean I'm right, is that all the theoretical numbers we're using to manage trades on the Wednesday, Thursday, Friday of expiration are all BS anyway. So let's not play in the BS sandbox, and let's play in the, what I would call the sandbox that's still that the good sandbox, the fun sandbox. Does that make sense? So if you're working full time, I mean, essentially it's like you can put on trades like, put them on Tuesday, take them off on Tuesday. You're selling them 11 days out, buy them back 4 days out. And you just repeat. I think the market is very efficient at taking money away from people who don't know how it works. But I do think that everything is fairly priced at the moment. Okay. All right. So, all right, good. So we know, so we got a very simple setup, and we're not even really looking at squeezes. I mean, guess what? If there's a squeeze, we're still going to sell a put credit spread, right? If there's a squeeze and it's a long setup, we're still going to sell a puts credit spread and buy a call debit spread. We actually just do the same thing, which is kind of nice. We might consider, maybe also buying a call, but we don't need to. The main thing is not to fight the squeeze, okay? And there's also a lot to be said for getting in once the squeeze is over. Mondays is okay, but Tuesdays, Mondays are a little odd, but Mondays. So the idea, and we're gonna do, we're gonna put on some trades Monday. You could also do them on Tuesday, right? And the other thing is too, guess what? When we find trades that we like, we're going to place limit orders where we'd like to get in. So, that's where you use the theoretical pricing model. So maybe, maybe on Monday, let's say on Monday, we like the idea of doing a put credit spread in Amazon, okay, but Amazon gapped up. So we just say, well, we can set it up so that it's like, okay, if Amazon falls $8 to this level, then we can already have an order for a spread in place at that level. And that's great. And if we get filled, great. But if we don't get filled, that's fine too. Which brings me to a very interesting question. So let's, again, don't worry about the amount of money because we're talking about percentages. So let's say, so the question here is how many positions? That sounds like the title of a different talk, but we'll go with it. How many positions? So, all right, 100K account. Let's just say goal is 5% per week. How many positions? How much risk? What position size, which of course is about how much risk. Moose, that was awesome. Trading Sutra, I like it. Yes, trying. Absolutely. If you missed the live trading on Monday, you could set up the buy for Tuesday and it would still be valid. Absolutely. So, okay, so let me ask you this. Let's say, so let's go back to that 25 lot. So we got a 25 wide spread on Google, 1050 credit, 1450 max loss. So do we do 1 lot, 5 lots, or 10 lots? Like what in there fits the most? Yeah, Dirk, I'm all a break actually sounds great. You know what? That's actually a good one to think on here because we're at the home stretch, but I do feel that some caffeine here is in order. Let me show you guys something real quick. If you guys are not doing the live trading and you're thinking like, wow, that would be cool to do the live trading, you can upgrade. So all you got to do is just go to simplertrading.com/upgrade. Obviously, you've already paid money to be here, so you can just apply that to upgrade to the live trading, or you could also upgrade to that as well. And the live trading schedule is going to be on the 19th, 22nd, and 23rd. So that's Monday, Thursday, and then Friday. And the link for that, and then we'll take a 10-minute break, and I can come back and answer any questions you have. And it's always good to be able to do this live, right? And www. And we'll do some bonus trading if there is any short squeeze setups. I've been looking at stamps.com and things like that too, and I can show you guys how to do high short interest short squeeze. Okay, so let's do format, font, 36. To join me for live trading, call if questions 512-266-8659. And then let's do a quick break. And we're in the home stretch here. Home stretch back at 4 p.m. Central. So I know we should be done. We'll start again at 4, and we should be completely wrapped by 4:30. Yeah, now if you can't do the live trading live, one of the things we will be doing is you will be able to sign up for text alerts. So even if you're at work, you can at least like get the text alert of what trades we're doing and follow along, and then you could just watch it later and see what's going on. So I know that some people do that. But I'll leave that up there. Let's go grab some caffeine. And again, we'll be done. We'll wrap this up at 4:30. So 10-minute break, 30 more minutes, and then we will get rested and relaxed and ready to go for Monday. The hours of live trading are simply during market hours Central Time. So we'll typically start a few minutes before the market, opening bell. Market opens at 8:30. It closes at 3, and then we'll spend 20, 30 minutes after the close, answering questions, recapping the day, and things like that. All right. So back in 10. Well, let's do. We'll be a few minutes after 4. Right? Ready? Break. Okay. Yeah, so I don't know if there's any questions on this. I mean, essentially, the live trading, of course, is just the whole idea is doing live trades. If you can't be in front of your computer, you will get a notice on how to get text alerts and things like that, too. And, of course, it's a chance to ask additional questions. Generally, from about 11 to 1, we're not doing anything. That's kind of like an extended lunch/break. There's really you want to hit it in the morning during the lunch session. There's really not much to do. And part of my trading plan is actually getting away from the markets for a couple hours. That way you don't get that impatience bug hitting you. Go to the gym, that kind of stuff, and then come back for the close. Yeah, so in general then, if you're, to do this, is the main point is you don't need a lot of stuff on, okay? So in general, so if you've got, say, 5 positions. Now, in my Thinkorswim account, my aggressive one, I have done up to 10% risk per trade, 10% of my account risk per trade, but that's a lot more aggressive account, okay? We don't need to take that much. So in general, what I look at is kind of like, okay, we know that out of 5 positions, okay, let's say that we've got our targets and stops in place. And, again, if our goal is to make, $5,000, then, I mean, on the one hand, you could do one trade as a $5,000 credit, 10-lot trade, $5 wide, $5,000 credit. And if it expires worthless, you made it. Well, we're not worried about expiring worthless and all that kind of stuff too. So, the question is then if you had 5 positions, okay, and let's say, one makes $1,000, one loses $2,000, one makes, $3,000, and another one loses $500, and another one makes, so 3 and 1 is 4 minus 2 is 2. Another one makes, $3,000 or something like that. I mean, essentially, at the end of the day, you're there or you're close, okay? So what we're looking at here is we're trying to set up positions where we don't have a lot of crazy swings, okay? We don't have a lot of crazy swings because there's no need to. We've seen what happens over time. Now, once in a while, a potential home run setup will come along, and we've seen these happen in stocks like Tesla and stuff like that too. And if one of those happens next week, we'll certainly take it, but I'll also show you ways to take it as what I would call conservatively, as a spread. The main point here, because I'll see this sometimes in the trading room, is that we'll put on a trade and we're sitting there and it's not working, which obviously happens. And somebody in the room will be like, oh my God, I'm lost all my money on this trade. And it's just like, what are you talking about? Or this trade is I just got killed. It's like, well, what are you talking about? And that is, now look, sometimes there's 3 trades in a row that don't work and that's not fun. But you want to think about is that if you lose 3 trades in a row, what kind of impact is that going to have on your account? Okay, now if you're trying to double your account, those trades are probably going to be pretty big and it's going to hurt. If all you're trying to do is get 5% a week, you don't need to have a lot of risk on, okay? You could do, even on a $100,000 account, a 4-lot Google trade, a 6-lot Facebook trade, a handful of stuff like that, with the idea that, you don't need any of those trades to turn into a home run. You're just grinding out income, okay? You're just grinding out income. Do you do a mix of bullish and bearish? Okay, so that's a great question. I like to, yes. So what I would not do, essentially, so a question would be here too. I mean, again, this is going to be ballpark depending on what, kind of like, okay, what your goals are, but general rule of thumb for 5% per week, and you can adjust accordingly, obviously. So 100K account. Mix of positions, i.e. not all bullish tech. Okay, that's important. That's called diversity. And in general, I would say max is 5 positions, okay? And then total max loss on all 5 positions. Now, first of all, if you've got 5 spreads on, okay, and some are bullish and some are bearish and some are in tech and some are in oil, what are the odds are that you're going to wake up tomorrow and all 5 are at the absolute max loss, right? Now, you've got to take that into consideration. But even on Friday, when Amazon gapped up against me by like $20, my call credit spread did not go to max loss. I sold it at 450. I got out at 8. Okay, again, my long put got hit hard. But the spreads are very forgiving in those situations. So even in that situation, it wasn't a max loss. But you want to keep in mind, if everything goes to max loss, which by the way can also only happen if you hold it through expiration. That's why we get out of these things early. Okay, how far down is your account going to be? So I look at this as total max loss on all 5 positions is 20%. So 20K. Now, that's kind of the most. It's it can vary. It can actually be less than that. It actually could only be 5%. So as you get a feel of this, you'll see that, gosh, to make 5%, how much do I need to have at risk in terms of a max loss situation? Okay, is 20K? Well, is 20K too much? Well, it might be, depending on kind of the market. Maybe it's 10. You could do to 10K. But the main thing as pointing out here is that you can go up to 20K, because you got to understand, if you've got 5 different positions on and some are bullish and some are bearish, you just got to ask yourself, what are the odds you're going to wake up tomorrow and they're all at max loss? Okay, does that make sense? Because it seems scary at first. And then part of the reason, let's see, where's the questions and stuff here? And I'm actually not time for some coffee. And I'm not actually a huge delta neutral person. So a typical, here's what I like to look at. I like to look at the key sectors. So I generally like to have something in tech, financial, and consumer. Okay, so a good example of that would be, so we got something on Facebook, Goldman Sachs, and Disney. Okay, that's a nice mix, and it could be a combination of bullish or bearish depending on the scenario. And then from there, you could have something where, a non-correlated asset. Okay, so you could have, or let's say that these are all bullish, right? So let's say these are all bullish. Then you could have bearish QQQ as a hedge. And then you could have something like, GLD or something like that too. But the main thing is, again, you're not going to wake up and you're not going to have all your account bet on one stock, hoping that it does well. No, so Eric, so in general, no, actually, I'm not to me, the slow moving stocks are not necessary. They're not necessary. And we'll look at some things that would, during the live trading, we can look at like intraday, like timing for squeezes and stuff like that too. Do you avoid trading Fed week? Good question. I do lighten up on Fed day, depending on the stocks, because not every stock is going to be impacted. Do I avoid earnings? Okay, that's a great question. So yeah, for this strategy, I do not do binary events. So I will look at some stuff after earnings are released, but I'm not like, this is an account where I'm not planning to do earnings trades. There's things like run up into earnings that are fun, different things like that. But this is more just kind of like, it's essentially like, 14 days out, buy it back, roll it, and keep going. Yeah, I generally avoid ex-dividend dates. And a lot of times I do, you can kind of do some of the same stocks over and over again. So, there are stocks that work fairly well with this. There are, stocks that are pulling back to key support levels that meet the criteria that we've talked about. The nice thing with this, though, is that you don't actually need to spend a lot of time, looking for stocks. I mean, I do like our web-based scanner. That's good. It's got like, we were talking about, okay, well, what's a bullish setup? Well, our web-based scanner, that'll give you a list of like, hey, here's a list of bullish stocks. Here's a list of bearish stocks and things like that too. Yeah, you can do 2.5% a week, but we're also opening the idea that why not try for 5% a week? And we talked about the different strategies around that. Is there a stock price range? Actually, no, because if a stock is, Google, a $900 stock, you might do a 1-lot spread, and then on a $90 stock, you do a 10-lot spread, and it's the same amount. So let's do it. Let's look for a couple of trades here. And the scanner. So on the scanner, and I don't know if everybody knows this, we do a good job of hiding this, but we have a scanner. So this is our web-based scanner, and if you go to daily scans, like daily bullish continuation, this will meet all the criteria that we were talking about. And then you just sort by open interest, and you'll see, EEM, FE, FireEye, different things like that. And those are things that you would essentially, sell, put credit spreads and things like that. Or if you're looking for more bearish, you could hit, bearish continuation, and those will be ones that are setting up as bearish. And it's just kind of nice because it saves time. Cisco. So let's go look at Cisco. Is Cisco one? And then we just kind of, do a quick check on the chart and just kind of make sure that, oh yeah, no, that does meet it. And if we come over here and we look at Cisco, and just say, all right, so for Cisco, There we go. And yes, it absolutely meets it. We're below 21, yada, yada, yada. So now we want to do this trade, or we can do a put debit spread or a call credit spread. So we come over here, here's Cisco, and we already know. So are we going to do this week these options, or are we going to do these options? So which options am I going to look at? These that are 13 days out, or these that expire next week? Yeah, exactly. 13 days out. Now you can go further. So just so you guys know, but we're not going to do these. We can do these, and we can do these. So we're going to close this. Now we want to check. So the expected move right now is 89 cents. So if we come over here and we look at Eric's stats tool, we can see we got 31.34. It's even showing the upside is even lower than that. Okay, so what that's telling us is we can even get there a little bit more aggressive. But what we already know is that we're gonna set up our deltas. And again, this is being recorded. I just want to show you how this is how straightforward this is. We're gonna sell the delta 60, right? Now, if you're sitting here because you're looking for this call to expire worthless, right? And so you're coming along here and it's like, oh, okay, here's a delta 70. So that call's in the money. So, if you're saying that your goal is to sell a delta 60, but you see a 54 and a 70, which one do you do? So which one should I do here? Yeah, it's actually not really critical. It's not super critical. I mean, what we're looking at here is that the stock is going to continue falling. So we'll get a little bit more bang for our buck on the 70. On the 54, we get a little bit more flexibility if it trades sideways. The main thing in here, though, is don't worry about it too much. It's not a huge deal. So let's say we sell the 31, and then we're going to buy the 30 as protection. So 18 and 35. Again, we can look at Eric's stats tool and say, well, gosh, is there anything here to kind of be concerned about? But I mean, we can see that the trend is lower, and so we're expecting it to fall, all that kind of fun stuff. So the main point here is don't worry about it too much. I mean, essentially, you're going to get into the situation, and so here you've got a 70 and a 54, and then here you got the 35 and the 18, okay? You could do for me, I would go with the 70 and the 18, okay? I would say the wrong combination would be the 54 and the 35. The rule of thumb you want to use is you want to have at least 30, if you want to call that points, between your deltas. So if you sell the 54, right, then if you subtract 30 from that, then that's going to give you, you want to at least get a 25 or better delta. Does that make sense? So at least try to get at least 30 in between. That's the main thing. So if I did the 70, 18, let's see what that looks like. So I'm going to sell the 31, and then the 18 was what? 32.50. And I'll do it as a one lot so you guys can see it on a per contract basis. So 73-cent credit, and if we look at this, essentially it's pretty close to a 1-to-1 risk-reward ratio. So per contract, we're risking $73 to make $77, okay? So a lot of times people ask, well, is this appropriate for small accounts? Well, that's not too bad, right? And you, of course, adjust the accounts accordingly. So does that make sense? I mean, it's really that simple. And then we'd have our kind of our stop and our target. And then obviously then we have our rule of thumb. If by next Tuesday, neither the stop or the target's hit, we just get out. Well, yeah, and we do want to make sure, and that's part of what we'll be looking at too, is so I'm not going to set up any trades today because we want to let the markets open on Monday so we can see where Eric has his tool, where the levels are. The last few weeks I've been going to mostly cash over the weekend. Will I be doing that for this account as well? For these kind of trades, there's actually, I actually prefer to hold over the weekend and take advantage of that theta decay. Where I go flat is when I'm focusing more on directional stuff. Target is set by doing a closing order that's good till cancel. Yep. And then the stop is mental. So for the stop for options, I'm not a huge fan of placing live stops in the options market. You can do a conditional order, which means like, hey, if the stock gets to this level, then get me out of the position. You can also set alerts and just say, okay, now it's time to get out of this, and that's fine too. We'll talk more about that. But if I'm traveling, I'll use conditional orders. And what a conditional order just means is like, all right, look, if Cisco gets to $32, then close out my spread at the bid plus 10 cents. It can get a little complicated, but we'll spend some time doing that. And of course, Thinkorswim has any broker has free tutorials on how to place conditional orders and things like that too. Do you follow the strategy on SPX or RUT? Yep, you can absolutely do that. Will the trading next week be taped? Yes, it will. And a big part of what we're going to be doing next week as well, and I do want you guys to consider doing this as well, is that part of successful trading is that you have got to do what? I mean, one of the key things of successful trading is, first of all, you got to have a plan. You got to write it down, which was what we've been talking about today. But from there, you got to journal. And I think it's important every day, anytime you get into a trade, take a screenshot of it and say, why did you get in? Okay, what was your position? And then most importantly, what you think is going to happen. Okay, and this is what helps develop your intuition. And then when you get out of the trade, compare what happened with what you thought was going to happen. Okay, and then what you do is just compare the results. So I like to keep my results in a spreadsheet. Obviously, you can look at your statements and just kind of. I don't have a running list of all my trades. I'll just kind of keep the highlights. In terms of like on the P&L, I just like to look, did I make money or not during the week? Okay, here's where I started. Here is where I ended. Here's how much I wired out. And so, and I use Snagit. And so what I can do with Snagit is just say, and there's free, this is like a $50 piece of software, but there's, you can use OneNote, Web Clipper, things like that. And so, you take a screenshot like this, and then I can just come over here and just say, okay, Cisco meets the criteria for a downtrend on both the weekly and daily charts. My plan is to sell a 60-30, a 60 delta call, and buy a 30 delta call as protection with the idea that Cisco will trade sideways to down, making this position profitable. Now, what's nice about spreads is we're not too concerned about where it goes. Okay, now if Cisco goes here, that's great. But if Cisco goes here, we still make money. Obviously, we don't make money if Cisco gets purchased by Amazon on Monday. Well, and remember, our default target on all these, I use 70% of max profit, which we talked about at the beginning. You can also use 60, which means you'd be getting out a little sooner, which is also fine. Do we have to consider IV? So the nice thing is that if you understand the Greeks and you understand like the ranges of implied volatility, i.e. is it at the top of its range or not, that's useful information. But with the way we're doing it, it's not as critical. So we're not necessarily looking for a situation where IV, reverts back to the mean. And one of the things I've found is that when IV is at the top of its range, there's usually a good reason for that because those stocks are crazy. And, I'm not interested in doing this with a biotech stock that's got 300% IV. I like those nice 30 to 40% IV stocks, like the Alibabas of the world. Do you trade the VIX with the system? So I don't. The one thing with the VIX is that, the whole world is short volatility right now. And you can sell call credit. Essentially, if you're going to do this on the VIX, you're going to sell call credit spreads because that's where the premium is. Like there is no premium in selling puts. Would the Cisco daily squeeze be a concern? Well, so the thing with the squeeze is that it is a continuation indicator. Okay, so here was a squeeze. You can see that we were trending higher. We're still holding the moving averages. Boom. Here we're trending lower. So we're assuming that this squeeze will eventually trigger short. And that's typically what happens, 75% of the time. How I run over the stats tool. Were you here at the beginning? So that's how the example used was Google. That's one where when setting up parameters for spreads, and they're good, and it's good for targets as well. Again, it gives you an idea of where the stock has gone. Yeah, so here's one of the things I always like to look at. So this dividend, when is this dividend? It looks like the dividend is not till July, but if for some reason there is a dividend, I'll just pass. So I do like to look at these charts so that I can see where the earnings are, and all that kind of fun stuff as well. Well, if Cisco moves up on Monday, that's great. So ideally, guess what? Cisco moves up into, and we got to see where these are on Monday, but think of it this way. So now that you guys are familiar with Eric's tool, if we have a stock in a downtrend, and on Monday/Tuesday it rallies into Eric's L1, what a fantastic place to sell a call credit spread. Because now we know the stats of what the odds are that it'll even get through that, let alone get rejected at that level. Yeah, and Sarah, don't worry. This is all being recorded too, and this will be up shortly, and you can take a look at it. So for Tastyworks, I have not placed a trade on it yet. So while I'm very fast on Thinkorswim, you'll be pleased to watch me fumbling around on Tastyworks. I'm gonna be like, all right, I know there's a way to put a spread on this thing somehow. Is there any reason to incorporate slightly lower time frames? Okay, so Bo, so the beauty of this is that it's designed where, look, if you're working full time, all you got to do is do the daily and the weekly charts. You don't need to stare at the screens. If you're a little bit more active trader and you can look at the 78s and the 195s, well, what we can do with that is time it with things like a squeeze. So I think was it NVIDIA? Let me look real quick. Or does anybody know of a stock that's got an intraday squeeze setting up? So we've got this is kind of like my default layout here, but let me maybe NVIDIA. Yeah, it was NVIDIA. All right, so here's NVIDIA. It's up on a daily chart. It's up on this 195, which is forming a squeeze. It's up here. So, I'll watch this on Monday, but initially I'll be looking to, sell some put credit spreads on this with the idea that it can continue, that those will trigger higher. But we can give it a little bit of time. So same thing. If you've got, look at this. If you're familiar with these other tools that we use, wow, we've got a RAF buy and a squeeze setting up. Yet another good reason to sell put credit spreads. Now, the one thing here is if you're using intraday squeezes like this, is that, and again, for my Tastyworks account, my plan is to just do spreads in that. Okay, spreads for income, just doing what we've been discussing today. But if I do see something like NVIDIA that has these squeezes, and I'm thinking like, wow, I might put on a spread here that's going to last 7 days, but I'll buy a call here too for the next 2 days to kind of take advantage of that pop because we got a squeeze, we got this. Well, I'm going to do that in my more aggressive account, okay? Because we already know what happens if that doesn't, if the long call doesn't work, it's going to create more volatility in your account. Will your text trade alerts indicate which account you are trading? Yes. So I'm going to try to figure out the best way to do that. I'm assuming I could just say TW for Tastyworks and then TOS for TOS. If you put on a trade on Wednesday or Thursday, do you still use the following week's expiration or go to next week? You can do either, okay? I would default to going out a little bit further, but you can do either. Oh, the weekly stats tool. So the weekly stats tool, and again, we need to let the markets open on Monday so we can kind of see where it is. But I use that more to manage what's happening. So the biweekly tool I use to help establish the strikes that I want to use, whether it's for a put credit spread or a call debit spread or whatever, or even an iron condor. And then the weekly tool I actually use to then manage the trade, because it'll show us kind of the areas where it's like, well, if it's running into resistance on that weekly tool and we're not it's close to our target but we're not out yet, that's a good sign to just like, okay, we can set an alert there, we can get out, different things like that. And then that is also good too, is if you are managing, if you are a little bit more aggressive and you're doing some weekly options. If you're selling iron condors, so the iron condors, so I actually use a slightly different, but I still use that 70%, okay? But I give it a little bit more room in terms of a loss. So on the iron condors, it's a 70-70. So instead of using theoretical pricing, I want to use the stats tool. What I've found is that this means I'm usually doing an unbalanced iron condor, okay? And what this typically means, I think we talked about this already, is like, I might be selling the equivalent of a 1.5 standard deviation call, credit spread, and a 0.75 standard deviation put credit spread. That, because it takes that into account. So put credit card, wow, that was a Freudian slip, put credit spread. So instead of doing a 1-to-1, which is like, oh, okay, what's going to happen here? It's like, well, this thing tends to extend to the upside, but not go down very much. So let's just kind of ratchet it up, okay? And so then from there, I do a profit target. Profit target is still 70%, but I give it a little bit more room on the risk side with a risk at 60%. So 60% of the risk involved. And again, we'll be setting those up and can kind of look at it. But what happens more with iron condors, more often than not, we have a time-based exit, i.e. using that same Tuesday. Oh, so from a trend perspective, typically I'll be looking at a daily chart, and what I found, there's a couple of times when iron condors can work particularly well. And it's usually after a squeeze has taken place. So where is the one? Was it Apple, Facebook? Especially in like the indexes. Here, I'll get the bigger chart here. Where is the one? Google, Goldman Sachs, Lowe's. So if you look at, so a lot of times what will happen is that you'll get a squeeze, right? And the squeeze will come and you get this pop. But then once the squeeze is over, you go into a sideways mode. And that's a great time to do iron condors. So, and then you can see here, it goes, once it goes here, you just go into sideways mode. So you're essentially, once the squeeze is over, what's great is because it just had a good move, the implied volatility is kind of high, but we know now that it's going to quiet down. So you can do these iron condors, and they're pretty decent that way. All right, yeah, and remember again, and for the whole idea, and the main takeaway here is that, and we're using this kind of Google as an example, but if you're trying to make, say you got a $100,000 account, and your goal is to make 5% a week, that's $5,000. There's no way you're going to do a 20 lot, a 20 lot put spread on Google. I mean, if it wins, yeah, you might make 10 grand, but you don't need to take that much risk. So, I think of it this way: if you've got, you also shouldn't have more than 5 positions, okay? And if you look at it like this, this is what I found to be true, okay? So if you've got 5 trades on, right? So let's say you have Goldman Sachs, whatever it is, Goldman Sachs, Cisco, Apple, Walmart, and let's call it ExxonMobil, okay? And, on all these, some are bullish or some are bearish, but if you look at it as, your goal is $5,000 because this is a $100,000 account. And what'll happen is that, essentially you have, Goldman Sachs, that's going to make $1,250. Cisco, might lose 500. Apple, might lose 1,000. Walmart, makes $2,250 and works really good. And then like ExxonMobil, hits $3,000. So you're going to have kind of a mixed bag of stuff, but at the end of and I don't even know what that adds up to, but what you want to look at it is like, okay, none of those positions should be big enough that, if it really goes, really goes to town, it's not going to hurt you too bad, okay? And you don't need to make a lot on these to do it. Keep in mind, if you did a, $100,000 account and you're trying to make 5 grand, if you did a 10 lot, $10 wide spread and sold it for $5, you're risking 5 to make 5 and it expired worthless, you just met your goal, right? And that's possible too. So instead, you're just breaking that out into, smaller pieces like that. And we'll structure the portfolio and you can kind of take a look at it and stuff like that too. But the main point is you don't have to take a lot of risk to do this. Oh, does it? That's good. So the balance I put in Tasty Work is starting off at 50K. And I want to keep it like that for a little while so we can kind of see, get used to that. At some point I may just put more money in it. But at least initially just starting off at that 50K so we can, because right now my TOS account is big enough where it's like, okay, a lot of people are asking like, okay, well, how do we position size this if it's a little, it's not quite that big of an account? It's like, okay, well, let's just do this. We'll all do it together. For the live session, am I going to do the whole day or tag team? So I'm going to do, my plan is to do each day, all of it, except for 1 hour. So I'll typically go from like 8:30 to 10 or 11. And then we may have like Bruce come in for an hour and talk about kind of how he sets up credit spreads and things like that. Henry come in for an hour the next day. Eric probably come back and talk more about the indicators. But essentially, I'll go for about, 2.5 hours in the morning and about 2 hours in the afternoon, give or take. When there's a dividend, essentially the stock drops, and so the options are impacted as well. Yeah, so if you've got a 25K account, you can mimic the trades and cut them in half, absolutely. All right. All right, guys. Well, thanks for joining us again. And let's see here. Again, if you want to do the upgrade, just go to simplertrading.com/upgrade. That'll get you for the live trading. So look, this is a very simple strategy, but it's very powerful if your goals are aligned into the idea of extracting weekly income out of the markets and either just doing that or also growing your account. I think you'll really like that you don't have to take a lot of risk. You're kind of playing on the outer fringes of what everybody else is doing. And we'll be doing these live trades on Monday, Thursday, Friday. Now, what we'll do, because it's live trading, is we're going to focus primarily on these setups and making sure that the account is structured and you understand the risk and you can see like, okay, that's why you're only doing this many lots, all that kind of stuff. And then if there are other trades that set up, I'll take them in my other account. And I'll be very clear about that. And you can just watch those. You can take them if you want to. But in the Tastyworks account, we're just going to do these strategies exactly as we've laid out in the class. That way, that keeps it pretty easy. and then any other trades that I happen to see or that pop up, like I've been watching stamps.com, I want to get into that, and I would put that in my other account. And obviously we can do those together as well. So you will get another email that'll come out either Sunday night or Monday morning with information, and it's the same thing. It'll be a Zoom room like this, and then be sure there will be a link and to also sign up for text alerts, which will that's how you can keep track of the trades that are done during the class if you happen to not be in there. And I think that's it. Yeah, we'll definitely look at the Russell rebalancing because that does provide some interesting opportunities for sure. Yeah, if you have TradeStation, you can. So that web-based stock scanner is where we can scan for squeezes. You can use Radar Screen and TradeStation in their scanners and TOS and stuff like that too. Yeah, so in the daily trading routine, which is essentially what we're going to do together live next week. I mean, I like to get up in the morning, see what stocks are gapping, get a general sense of what's going on. I do like to pre-plan out my trades, so when the market opens, I'm not wondering what to do. I'm just kind of like, okay, when the market opens, I've already got my levels established for Amazon, Google, et cetera, based on even things that we looked at today. I like to know what levels where I want to get in. And then when I do get into a trade, it's just making sure that I've got all my exits and everything planned. The nice thing about doing spreads is you're not worried about extensions and things like that. You're just kind of either your target's getting hit or your stop loss is getting hit or your time stop hits and you just get out at whatever price it happens to be at. And then at the end of it, you got to do a recap. You got to journal. You got to record your mistakes. Be honest with yourself. Track your progress. Jot down any notes, and then wake up and start it all over again. Yeah. So the scanner is a separate tool. If you're interested in that, it is. I do recommend it. I mean, it just saves so much time, and you can find a lot of good setups. I think it's simplertrading.com/scanner. Should probably double check. And then for a journal tool, yeah, I just use Snagit and Evernote. So I just kind of take a Snagit, and sometimes I'll just use a PowerPoint since I know if I've got a presentation, I can use them as examples. But a lot of people I talk to use OneNote. That seems to be pretty easy as well. Green trades to all. I like that. Do I repair trades or to stop them out? Sometimes I will repair them. For those of you that don't know what that means, it just means bringing in additional credit and trying to kind of work your way out of the trades. And there are times when that's appropriate. And my default, though, is to get out because, I mean, essentially, you're setting up your parameters. Typically, if I am going to defend it, it means I don't have a full position. Like I may start off with a half position, and then I can, add to it. All right, guys. So I think that's good. I think we're doing good on time. It's 4:45. We went over a little bit. I'm going to clean up the presentation that we did today, and that'll be available to you shortly. And then we will be locked and loaded and ready to go, which will be a lot of fun. And I think you guys will be pleased with this. It's a much more relaxing style of trading than it's like buying calls and holding overnight and praying for a gap up, right? Which is viable for stocks like Tesla. But it is a nice, steady kind of a source of income. I encourage you to have an account where you're only doing this. That way, because I've seen this too, where people will say, wow, these trades are working great, but, I keep giving it away on, these earnings trades or something like that. Set up different accounts. It's not difficult to set up a couple of different accounts, and that way you'll really get an understanding of what works and what best fits your personality, which is great. I appreciate it, Sadish. That's great. All right, guys. Yeah, and the surprising thing with this is that, again, You know, a lot of times people go into trading thinking much bigger than they need to. Like, I got to double my account, which means, you know, they're thinking I got to do it like this week. So the amount of risk taken on to do that almost always will destroy the trader in the end. And this is a really clean way of doing this, keeping a level head and generating a consistent income out of the markets, which is what we're here for, right? So thanks, guys, again. It's always good hanging out with you. And good to see some of you guys from the live event. And I will go now rest my voice for Monday. You guys have a great weekend and looking forward to working with you live on Monday, which will be a lot of fun. All right. Excellent. You guys have a good one, and we'll see you then.